We track everything in terms of client engagements. Every time we talk to a client, every time a new opportunity opens up, we have a funnel that we manage, just like if you were running a P&L, where deals funnel in from the top and filter their way down to the bottom. I can tell you right now, the 4 labs are involved in about 800 client engagements a year. And so we're very much in the market, hearing challenges, engaging with that, and that is one channel into the product pipeline or product concept pipeline that we've developed.
Welcome to the Tearsheet podcast. I'm Zack Miller. We continue to see consolidation across the financial services industry. In fact, a lot of traditional FIs have entire innovation programs designed to tap outside talent. But what if you're looking for organic growth? If you're Experian, the global financial data firm, how do you get more out of your existing assets? Things like the data across the enterprise, its distribution channels, its salesforce, and brand. You create DataLabs, an internal environment outfitted with data scientists and crack product professionals, where Experian can create future products around customer needs. Eric Haller, head of Experian DataLabs, joins us on the podcast today to talk about how the data firm finds pathways to innovation while positioning the greater firm to be competitive in the future. We geek out a bit on tech as Eric describes some of DataLabs' experiences with new modalities like text and voice for credit. We also discuss AR, VR, and advances in cryptography. Eric Haller is my guest today on the Tearsheet podcast.
My name is Eric Haller, and I'm the Executive Vice President and Global Head of Experian DataLabs.
So what is DataLabs? Like for our audience that hasn't heard of DataLabs, what is like, it sounds like some geeky think tank, huh?
Well, geeky, yes, think tank, no. We are the R&D part of Experian. If you're not familiar with Experian, we are a large enabler in the information technology industry. We serve a number of vertical markets, including financial services, with 17,000 employees, and we do about $5 billion a year revenue. The labs are all about breakthrough experimentation in all of our businesses across all of our geographies. We do business in over 40 countries.
And I guess, what was the genesis of the labs? When were the labs established, and what role do they play in the greater Experian sort of ecosystem?
So this is my second tour at Experian. I actually was with Experian back in the 90s doing corporate development and strategic partnerships, and left to do a few startups, and was recruited back to lead one of our P&Ls. And in that time that I served leading one of our businesses, I came to the conclusion that we could be doing a lot more as a company, just investing in ourselves and leveraging the assets that we had, whether it be the data in our enterprise, our distribution channels, our brand, our sales force, where we were looking, and we always look at, inorganic opportunities to grow, but where we could actually invest in ourselves as an organic opportunity to grow, take bigger risks. So I made a pitch internally to create an environment that would allow us to outfit ourselves with data scientists, software engineers, product development experts or leaders, where we could de novo organically build the products for our future. And that investment was made about 9 years ago. It was just a little kind of a toe in the water. They gave me enough budget to hire 7 people. And they said it was okay that I started up the first lab where I live down here in San Diego. And from there, it's grown. We have 4 labs now, one in London, obviously the one here in San Diego, Sao Paulo, and Singapore. We have 110 scientists and engineers and product leaders across those 4 labs. And the lab products themselves are generating 9 figures in revenue for Experian. So over the last 5 years, lab product revenues have grown at a compound annual growth rate of 120%. So we're really excited about the impact that these products are making on our core business and the products that are in our pipeline that should shape our future.
So I'd love to hear about some of those, the products in the pipeline in a second, but you mentioned the revenues that were produced by products that have been developed in labs. Obviously that's a great KPI. Are there other KPIs that Experian measures, the value and the success of the data labs?
Well, it was always our first when we first entered into this adventure. The bar was pretty low. I worked for our global chief operating officer, and he said, Eric, if you can just get us positioned so our customers, when they're running into challenging problems, think to call Experian, that would be a great measure. And so we can survey sales and see how that feedback's coming in and how many times you get called out to meet with a client. And that was the initial bar. It wasn't even revenue related at all. The handshake deal that I had with with the guy I worked for was, we'll know if it's working, we'll know if it's not working. And we don't know what kind of growth curve, revenues are going to take. And I never want to hold the labs accountable to hit a specific revenue target. That's likely to start to ease off on the risks that you're going to wind up taking to try to skate ahead of where our business is currently. And that arrangement's worked really well. Now we track everything in terms of client engagements. Every time we talk to a client, every time a new opportunity opens up, we have a funnel that we manage, just like if you were running a P&L, where deals funnel in from the top and filter their way down to the bottom. I can tell you right now, the 4 labs are involved in about 800 client engagements a year. And so we're very much in the market, hearing challenges, engaging with that. And that is one channel into the product pipeline or product concept pipeline that we've developed.
And do the 4 labs have different personalities? Like, do different geographies focus on different problems?
Totally, completely. That's a fantastic question. So, when we started to build out the labs, management question number 1 was, how do you want to have those labs contribute as part of your investment portfolio in terms of the products that they're building? And our course of action was to let the region shape the problems that wind up being resolved or addressed in the product portfolio for that lab. So for example, in the UK lab, they're very much about GDPR and open banking, and they have been for several years. And the whole world is starting to move in that direction. So by the fact that we have a diversity in our portfolio of ideas and solutions has surprisingly given us the opportunity to port innovation from one geography to another. In Latin America, the gentleman who runs the lab there, we hired from Telefonica, actually from Vivo, which is the branded Telefonica business in Brazil, and he ran R&D for them. So the solutions that he gravitates towards, whether it's subconsciously or otherwise, have everything to do with mobile. And that's not all that lab focuses on. It's got a very broad set of things that they're addressing. But because of his expertise or core expertise in mobile, we're seeing a lot of innovation coming out of that lab with that respect. In the U.S., it's all been for the last few years. I mean, it's a very broad portfolio, but in financial services, there's been definitely heavy emphasis on customer acquisition. And so, the front end of that pipeline, we've been very focused on that and trying to develop new thinking, creative ideas, and new products in that space.
So I want to hear about that in a second, but I'm curious first to understand a little bit better how that product pipeline that you described interfaces. What does the interface between labs and the rest of the company look like? How does a product make its way through the pipeline and into the general product portfolio?
Yeah, so it's been an evolutionary process, and I think we've learned a lot over the last 9 years. Initially, one of the first questions you get asked is, how do you prioritize? So with 800 client engagements, right now we've got 41 projects that we are actively engaged in with a path to becoming a product in the market. But how do you go from that 800 down to, maybe 30 to 40 projects a year that you're going to actually put resources against? So initially, 9 years ago, we said, let's do that by committee, which is a terrible idea. The
I
idea
can
was,
imagine.
hey, since every business is investing in these labs, let's have a large committee with all the strategic business unit, presidents, and we can all sit around a table and you can share all the concepts that are coming through and the criteria you're using to shape or describe what they represent, and then we can do a vote, and I'll make sure we all agree. Fortunately for the labs, that process had a very short shelf life. We went in with our list of priorities. We described how we would rank them and what we did. And the first couple times, there were no changes to the pipeline at all in terms of how we prioritize things. And then it was suggested that we maybe make it an annual event. And what wound up happening is that prioritization process has completely disappeared. We haven't engaged in it in about 6 years. And that's because, we're very good at communicating what we're doing. And because we have a strong process, they're supportive of it. The process itself, given my background in M&A and in strategic alliances, I can tell you that, I spent a lot of time building very thick papers or documents, very large PowerPoint presentations. When we went into the board to talk about a merger or an acquisition, we were very well prepared and thought through so many different aspects of the deal. If I did that for every opportunity that came into the lab, the people working the opportunities and just figuring out what we would work on would probably be a larger group than the group that's actually doing the work. So that doesn't make a lot of sense. And so what we did is distilled all of that thinking down to two things. One thing was the magnitude of impact. Is this a project that we believe will move the needle for Experian? At one point, we gave it a number, which for us was $10 million in revenue a year. We had to be able to either whiteboard, napkin scratch, articulate around a table how this product was going to at least achieve $10 million of revenue a year when it was mature. If it didn't get to that, it's not worth our time. Believe it or not, that weeded out a lot of ideas. The second one has to do with our ability to execute. And that's the other thing that weeds out a lot, where people come in with these ideas that are like, we'll say, I've heard the term boil the ocean or blue sky, or, really large, ambitious opportunities. But, you would need, we'll say, maybe hundreds or thousands of members in an ecosystem to adopt what you want to do. Like a classic chicken and egg problem. We see that in the payment services business all the time, acceptance and issuance. Those are really challenging things. Sometimes we're willing to take those on if we have such a clear value proposition that, we think we might have a chance at it. But typically, if we don't have the right types of people that we'd have to go on a massive hiring curve for, or we think that, the people that you have to get or the players you have to get to make something happen is just way too ambitious, we downplay that. And so what winds up happening is we get projects that are 1 to 3 years ahead of our business, but close to our core. They're not so extreme that when a product is completed and it's active and we've got 4 or 5, 6 clients on it, that it doesn't have a home in one of our business units. So the lab's role is to beta test or proof of concept, maybe get up to a half a dozen clients on something, and then it goes to the business to scale.
And then they're responsible for working it through.
They're responsible. So I can tell you, like, the single biggest product that's come out of the lab, we had signed up. We had 6 of the 10 largest banks in the United States running in production out of the lab, which I do not like. I don't like having all that responsibility to keep things up and running when you've got hundreds of analysts in India using your platform and it goes down on the weekend. All of a sudden you've got your R&D scientists on the weekend trying to get it back up. Those things are not great for an R&D environment, but we did that, and at the right point, our business hired the right people to be able to take it on. At the time, it was the first multi-tenant Hadoop cluster running both Cloudera and SaaS in the world. And so, to have we built that, gosh, I want to say 5.5 years ago, somewhere
Hmm.
around there. So it was pretty cutting edge at the time. And we had to get the right personnel within the business to take it on. But once that happened, that scaled to be what's now considered to be Experian's largest blockbuster product in the history of our company.
Wow.
Yeah, so
So
cool stuff.
very cool. So before we talk about, I guess, things that are 3 years out, can we talk about, you said you've done a lot of work in the past couple of years on customer acquisition. Can we talk about some of the things that have come through that work?
Yeah, sure. So, they range anywhere from, like, if you've seen the most recent release on Experian Lift, which is a product focused on the underserved market. So, we do innovations like Boost and Lift, where we allow customers to use, we'll say, non-traditional data rather than what's reported into the bureau. They can use the rental payment trades, their utility payments. We may go to public record information and other data sources. And then we've coupled that, rather than using historical logistic regression modeling, we've developed our own approach to machine learning, where we can actually explain how the model's performing, even though it's a nonlinear approach to credit risk modeling. We developed our own technology around explainable AI to be able to do that. And we benchmark its performance against other technologies that have been more vocal with white papers and patents, so we could see how we would perform against that. So that's a product we just released. We have a lot of excitement around that. And that's actually in we'll say, the underwriting part of acquisition. On the engagement part of acquisition, we're actually engaging with the consumer. We built a product that's out in the market now called Text for Credit. The challenge that we were hearing in the market was principally it had started with retailers, and we heard the noise that gee, here we are in modern times where everybody's carrying a mobile phone in their pocket, yet when we want to engage with them about opening up a line of credit, we still have the same processes in place that we had over 20 years ago, where somebody walks up to the register and at that point an associate says, hey, would you like 20% off of the goods you're buying today? Would you like to open up a card with our store?
Mm-hmm.
And, that's, I probably preaching to the choir. Everybody realizes it's a bit annoying, especially in these days, especially when you have people behind you. It's an awkward feeling. What if you don't get approved? Yeah, sure, I'll take it. And then so sorry, it didn't work out. Here's a number to call. It's just not the right kind of thing that we should be doing now, when we're almost 20 years into the 21st century. So what we came up with was an approach that didn't require a lot of infrastructure for the retailers. We had experimented with integration within Wi-Fi to acquire customers. We experimented with beacons. We partnered with several companies at the time, outfitted our lab with beacons and built mobile apps that would trigger by beacons. We went through, and I think, almost like a dog chasing a squirrel. Every time a new tech opened up, we were like, hey, well, let's try this. Maybe we can make this work. And then I can't remember exactly how we were inspired with the notion, but we said, what if we just used the text on the phone? What if it was just texting a word to a short code, and then we can engage somebody through a mobile web browser? It doesn't even have to be they don't even have to download a mobile app.
Mm-hmm.
Could we make that work, and how convenient could we make it? So, we partnered with the mobile network operators where we can they can provide us information that we can verify against when somebody engages with us through their mobile device. And they do that, they opt into that, by the way. So it's, when they text a short code, they get a link back, including a link for disclosures, and they're told, hey, this is what we're going to do. Do you feel comfortable with it? It's actually, not invasive at all, but they can click on the link, and we'll address our customers by name. We've verified a lot of information before we even ask them for a piece of information. And the amount of data that we ask for is very limited. It makes life much more convenient. You're not spending a lot of time typing characters into your phone. We, being Experian, we have a nice advantage in that the clients that we work with, we already host all their decision logic, their rules, their models. We already have the data that's being used to be accessed for the underwriting process. So when we have the front end right, the back end is a breeze for us.
Hmm.
And so in this case, being able to come back to somebody with an instant approval on a line of credit, that piece of the work is what we do day in and day out. But that mobile web experience, we really had to get right. And so that's being rolled out now. We're being very careful with the customers we choose to work with. We're working with several banks right now for credit cards, a major auto, I would say auto retailer,
Mm-hmm.
and we are working with some folks on the mortgage side for pre-approval for mortgages. When you're going through that shopping experience with the home.
Eric, given the fact that you have the models and the data in the background, do you guys spend a lot of time thinking about engagement and different channels, I guess, or new channels, I guess, to deliver that type of engagement?
We do. I mean, it's funny because with so many projects going on in the lab, it's a matter of how many folks do you throw against the new developing channels. But we found that a lot of these channels are easy to work with. For example, voice or augmented or mixed reality, virtual reality. We've spent time building beta products in all of those channels. But they're all in varying S curves in terms of adoption. And because of some of the cost infrastructures, I think it's going to be a while for some of those other ones like mixed reality and virtual reality to be mainstream.
Yeah, I feel like there's always a lot of hype and excitement around new channels initially, and it takes some time for adoption, obviously, to catch up.
Yeah, I think voice might be a little closer. I'm a big believer in trying to, if somebody's going to spend the money to lay down the railroad tracks, and all you have to do is build cars and ride on top of them, I'm a big believer in building the cars.
Mm-hmm.
And the nice thing about voice is, between Amazon, Google, and Apple investing a tremendous amount in building these smart speakers, and then consumers picking up the tab and buying them for their home. The idea of building skills that other people can upload and use becomes it's almost a no-brainer.
Mm-hmm.
The problem is I don't know how many folks that have actually uploaded a skill in one of their smart speakers. It's not like well, it is kind of like using your iPhone or your Android device and going to the App Store. But because that's a disconnected process, you got to go to a tablet or your laptop or whatever or your mobile device. It doesn't really happen. A lot of people don't even know how to do it. So there's going to come a point, we believe, that display and voice are going to unite. And when that happens, it's already starting to happen, but just really on the fringe, right? It's like, if I want to ask Alexa to change my channel on my television, I can do that. Or I can ask my Roku to do it if I want to do it. So I can talk to my TV today. Not a lot of people talk to their TV, but it's possible. But there's going to come a point where that television or other displays that you have in your house are going to come alive with your voice. And when that happens, we've already developed interfaces for how you will go about shopping for credit. We've already built the skills. We've already developed software for display. So when it's the right time, Experian wants to be on their forward foot to get that out the door.
Interesting. I guess we have time for one last question. And I guess you talked about some of the things that seem relatively close to launch. What about Skunk Works? What about big audacious ideas that you get, that excite you, that you see coming down the pike that maybe it's not this year or next year, but are there transformative technologies out there? Let me ask that way.
Absolutely, 100%. Actually, the thing that gets my heart level racing is actually it's in the world of cryptography, and I spent a bit of time way early in my career working at Visa back in 94, 95 on set, which was securing internet transactions for payment. using public key cryptography. I believe that secure multi-party computation is going to open up a tremendous number of opportunities for the world. I think it's going to change the way we look at data aggregation, data modeling, how decisions are made, and it allows multiple parties to contribute information to making a decision without the data ever leaving their enterprise. And I don't know how much time we really have for me to explain it, but I would say that
I would like, because I don't know a lot about it. If you can give like a elevator view of it.
Oh yeah, sure. So, well, I'm glad. So the elevator view would be that you get multiple parties that may compete with each other, but they realize that if they can collaborate in some meaningful way, they can all make better decisions around something, whether it's around a consumer's income, or it could be a commercial insurance carrier evaluating somebody's risk. It could be around ID authentication.
And the assumption is that information asymmetry enabled them to be competitive. They competed on.
They may be banks, and they all compete with each other, and
Okay.
so they sharing information amongst competitors can often that slows the world down, quite a bit, right? It's it's one of those things where the more data a business can compile in a competitive landscape, that is clearly can be a barrier to entry for others. So what SMPC allows competitors to do is share that information without yielding their competitive position. It can maintain a certain level of anonymity in the process. And it doesn't require any third-party intermediary to hold the data from all the other providers. So for example, we'll say in the commercial insurance space, I may sit on a portfolio of people that I've booked for underwriting, and I have a database of claims associated with that book of business that I have. I really don't want the other commercial carriers to know that I'm the one that has booked this particular account, and I certainly don't want them to know how I've priced it. I'm not particularly enthusiastic about sharing who filed claims, but I really want to know if I'm going to book a new account, if they filed a claim with somebody else. So how can I share the claims data without my competitors knowing that I was the one that booked that account, and without yielding any other specific information? So SMPC allows queries to run against that network of insurance companies, allows them to share insights on risk without yielding any of the competitor information or competitive information that they want to keep anonymous. And it doesn't require anybody to say, "Hey, all insurance companies, report us your data, and then we'll go ahead and then report back to you every time you send us an inquiry." So it's actually what I would consider to be disruptive innovation. And I think there are so many use cases for this, I'll say, disaggregated data decisioning that it sounds a little bit like blockchain, but it's not. I think that's the key here, and the cryptographic aspect of it is fantastic. It's an N-1 solution, meaning that you have to capture all the data running from an inquiry to be able to disrupt or decode the message.
Interesting. Eric, thanks for sharing all the insights that you guys are working on, and thanks for joining us on the Tearsheet podcast today.
Oh, it's absolutely our pleasure. Thank you so much.